Okay. So this is a kind of advanced class, not really basic though. Okay, but we are going to be making a little recap on some changes. Get, and that I'm very sure we are already used to some extent. Okay, so to proceed with the class, first of all, for those of us that study economics in school, get, we have idea about what we call human wants being insatiable. For those of us that understand economics, yes, we know human wants are what? Insatiable, which means whenever we are able to achieve one thing that we want, we tend to look for another thing to be able to meet up with. So when we want to buy a new iPhone, immediately you get that iPhone, you start looking for another bigger iPhone. Or you want to get a new dress, you are eager to get it. By the time you get that dress, you start looking for another dress. So that means human wants are what? Insatiable. So once we are craving and looking to we are always craving and looking to satisfy the next ones. That's just the major part of it. So in this scenario now, same thing is applicable in the market. Yeah. So, and this concept is what we call efficiency and inefficiency. Yeah. So this is concept that we are going to come back to. We won't start with that. So, but today, what we'll be looking at is what we call order block. That's what we'll be looking at today. So let me bring out my contents. First of all, I'll throw you a question. I want to hear you guys because this is not new. So I believe you guys are already informed. So I want to ask, what is order block? I want you guys to contribute to this. I need your contributions.
Can I define it? Hello, boss.
Yes, go ahead, go ahead.
Other block is the last opposing last opposing candle before a major break.
Oh, okay. Good. Anybody else that want to try? That's a good one. He said other block is in last opposing candle before a break. Okay, that's good. That's a nice one. Anybody else? I want to hear contribution. Anybody else that want to try? Okay, now the first thing I want you to get rid of is the concept of institution having their order in a particular candle. That's one of the first things I want us to get rid of. So I want you to start seeing the market not just as a forex market, but as a market in itself. I don't want us to see it as a forex market this time around. So the forex market, the forex aspect is just the fact that it deals with what? Foreign exchange, and it's being represented with candlestick. But first, it is a market. And in every market scenario, you have many participants. Like what? The banks. You see the retailers, you see the institution, you hear about the hedge funds, and also we have the what? The government. In any market, there are key participants. That's just the major thing. So like the way the government intervene in price floors and price ceiling, for those of us that did economics in school. Those that didn't do economics, you know how government set prices for products in the market. We have the sellers and we also have the buyers. Governments are in charge of what? Setting price. If you are someone that deals with markets, they have this regulation that they deal with setting price. So these buyers, I said we have the sellers and we also have what? The buyers. So the buyers comprises of different classes. And we have those that are wealthy and filthy rich. We have those that are okay, they are average. Like you can say they are technically rich. And we have those that are poor. everybody you find everybody in these classes I just mentioned, you are going to find them in this market. And in this society, let me say this environment, those that are rich tend to be what? The lower percentage. Isn't that the case? Those that are rich are always tend to be the lower percentage in every buyers, these buyers classes I just mentioned. We have the wealthy people, we have the average, and we have the poor. Those that are poor tend to be the what? The vast majority. Isn't that the case?
Yes, sir.
Yes. So the wealthy ones are what? They are in lower percentage. Why those that are poor are more of the vast majority. Okay, so we said, let me come again with that. It's important for you to understand that concept before we start moving into the major things we have to do before we go into our strategy. So we say we have the filthy rich people in the market, we have those that are poor, we have those that are averagely rich, maybe like the one that are technically rich. Yeah, in every society or environment, those that are rich tend to be the lower percentage. Then those that are poor tend to be the vast majority. This same thing is applied in the market. Remember, we are talking about the normal market this time around. The normal market, not forex market. So if the lower ones, the poor ones tend to be the vast majority in the normal market, then this same thing too is applied in the market, in the forex market. So majority that are trading are poor. Not that they are poor in the sense of capital, but they are poor. They are poor because of their mentality. Their thinking is very poor. So the government have full control. Let me just say, actually, when you look at the forex market, the government don't have full control, but they can control your education. They can control what you are exposed to and what you believe that actually work in this market. That's what the government plays in forex market. So if you look at the market, you hardly tell which candlestick belongs to any participant. So we can say it is totally wrong to say this particular level in the market belongs to an institution. Or we can say this particular candlestick, there is money that belongs to an institution at this particular candlestick. Because if there's money here, if there's money in any particular place in the market, there's money. And if there's no money, there's no money. You can see things in all perspectives of all participants. That's the best way we can look at the market. Whether retail, whether institutional, whether government, whether hedge fund, whatsoever. We just understand that there's money in a particular. And we don't want to focus too much that this particular candlestick belongs to what? An institution. So when it comes to the concept of order block, modern education called it what? Institutional funding candle. So let me see how another block work. So we all know this is how another block look like. You have a candle like this. After you move to the this area here, we call this area what? Another block. So let's say this is a high that gave us this candle, then this is a low. Price come back to this. You can see this is a series of candles. I came back to this. This is your other block. Is this not how another block look like? So irrespective of how you define this, like another block, this is what you get. Whatsoever we define, one of us define other block, as the last candle after a break of structure. Whatsoever definition you come up with, this is what you get as an other block. So what we should be concerned about is significance of another block. Right? Hope I'm communicating. So
Yes, sir.
yes, I want you guys to stop thinking for the institution that this particular candle belongs to the institution. And somebody will be like, okay, how much do you have that you want to trade against the bank? Okay, let me ask you across the globe right now, what is the percentage of retail traders compared to the banks? Is it more or less?
It's more. Retail traders are more.
Okay, retail trader are more. Okay, like in what aspect?
In humans, like population, and even in funds.
Human population, okay. Let's say we have 7 billion people in the globe and we have 1 billion trading the market. So how many will be retail and how many will be institution?
I think the retail should be about 60%, then institution could be 40.
Mm-hmm. Okay. Okay, for instance, now let me say we are doing, all the people that are trading, they are doing let me say we are doing 7 billions per day.
Okay.
The total money that is being traded is 7 billions per day. How much do you think institutions are doing per day out of that 7 billion?
I think institution could do maybe, I don't know, for funds they have like a very heavy amount of money. But those little amount of retailers, it's also something when you accumulate everything together. So
Okay, that's good. That's
institution,
brilliant.
mm,
That's brilliant. So that means that, okay, like for instance now, the entire, for example, the 90, like 95%, which are, let me say, 9,050 million of retail trader will be trading more. They will be having more capital, more than the institution, right?
yes.
Okay, when it's being compiled together, okay, that's a good one. Anybody disagree with that? Is there anybody disagreeing with that? That the retail traders has more funds than the institution?
I disagree with that though.
Okay, okay, let me hear you.
I think the institutions have more funds than the retail trader. I don't know the exact percentage, but the institution should be doing up to like 90% of the market, and the trade trader should be doing like probably 10% or so. Even though we are much in numbers, but the volume is different.
Okay, that's interesting. Okay, okay, so okay, if I get you clearly now, okay, um, if 95% are retail, get and the total they are doing is 7 billion per day. Total cumulative of all forex transaction is 7 billion per day. So if you think you in that sense, that means institutions are doing per day 6.5 billion,
Something like that.
six point
In my
five
own
billion.
opinion.
So that means the
Yes, in my
entire
opinion.
95%, which are the retail trader, which is let me say 9,050 million, are just putting 500 million in the market.
Yes,
Would you believe
that's
that?
my opinion. That's my opinion actually.
Okay, okay, that's good. So myself, you, yourself, every other is just 500 million. Do you think that's going to be true? So let me tell you more. Okay, like an average trader that is not even serious. Okay, let me say the one that is serious and the one that is not even serious. They have just minimum like $500 to $1,000 get in their accounts. So we need to really think it through. Sometimes it's true the institution trader has a lot of money in the market, but sometimes the real collective, that's sometimes the retail trader collectively, they far exceed the institution. So all we need to understand is how the retail trader trades the market. Hope you are getting it now. Are we getting it?
Yes, we are getting.
Yes, sir.
So that is why you see the concept of fake BOS and inducement. That is why it tends to work really good in the market, because majority of the volume do comes from the retail traders. So you have to agree in this sense now that the retail trader collectively get this $1,000, $2,000 that when it's being put together, 95%, when 95% dominate the market is a big and huge money in the market. It's a very huge money that it can by far be bigger than the institution get. So those controlling the market, they don't want you to think in this way. They don't want you to think that you are contributing anything to the market. They want you to think you are contributing little or nothing to this forex. Yeah. So we have to start thinking out of the box. And let's look, what is really the significance of order block in the market? Significance of order block in the market. The purpose of you trying to understand the significance of it is for you to be able to differentiate if it is subjective or if it is objective. And if you get that right, whatever is behind order block, you don't need any other thing. We don't need any other thing behind it. We just want to know if it is what? The significance of an order block. If it is subjective and it is objective. Good. So I thought of it. There was a time I sat down and thought of this whole order block thing. Because actually, no doubt, order block works. Yes. Yeah, it works. But sometimes, you don't notice price goes into the order block candle. And it disrespects it, isn't it? So when I was thinking about it, I was looking at why did they give it the name order block? Why did this person name it order block? So I don't want us to overcomplicate it. Yeah. So what is the expectation of everyone trading the market? What are they expecting? They expect if a candle comes to another block, they expect market to turn away from it, right? Isn't it?
Yes.
Okay. But does it really happen like that every time?
No, it doesn't happen as expected
Okay,
always.
good. So sometimes price disrespect it. Okay, and sometimes price reverse or it works like a level or POI. Get. So when I thought about it, I said, can an order block be a candle in the market that has an order in it? Therefore, price come back to the candle, picks those orders and reverse. Get. Or could it be an order block is a candle that block orders from going through it, hence price reject from there? So when I thought about this, I was no longer interested in being right or wrong, because at the end of the day, it makes me understand that if this is an order block, price come there and reverse. That's just what I understand. Price comes there and reverse. So does this mean every turning point in the market, it is costs or it is being induced by what? An order block? Otherwise, it means order block is what? Is subjective. Yes. Because if market turns in every point, yes, it means it is an order block that is responsible for what? Those turning points. Yes. Why market turns from every area in the chart. So the only way to see it being objective, there has to be an order block in every reversal area. Okay. There have to be a reversal in every They have to be a what? A reversal. And there have to be another block in every reversal area. It means that area that market is reversing from, there is another block in that area, which means other block is what? Is objective. You wonder why price don't get to the last buy candle of the other block. Did price get to the last buy candle? Is price getting to the last buy candle on this chart I showed you now? Yes or no?
It's not.
Okay.
No.
So you wonder why price don't get to that last buy candle. The reason why price don't get to that last buy candle is because there are type of order block. The last buy candle you are seeing here is what we classify as the sponsored candle. This is just one of the other block that we have. Get. So on a bigger time frame, get, you wonder price don't get to this area, price don't get to the area, is reversing. But on a bigger time frame, get, you have something like this. Let's say this is 5 minutes. Then on a bigger time frame, you have something like this here. If you go to maybe an hour, so this is a bigger time frame here. This is a bigger time frame. So what you see on this bigger time, on a bigger time frame, the entire candle here, you can see there's a candle here now. A candle from this this correction or whatever I call it, maybe it's a correction you call it, or this stuff that is moving, pull up to this pull back to this upside. Yeah, this entire area is what we let me say the entire buy pressure is what referred to as what? Buy to sell. Yes, where we are talking about buy to sell. The entire buy pressure from here to here is what we refer to as what? Buy to sell. So you can see from here to here now, look at this candle now, there is 4 there. This candle, you can't see this candle on 5 minutes, but when you go to higher time frame, like 1 hour, you will be able to see this candle here. And you see that price now respect this other block, because this is another block. Price now respect this other block from this area to the downside. But on 5 minutes, it looks as if it's not respecting it. It's not reaching to the other block, but it is coming down. So if you look at it, you might think there's no other block there, but if you go to other time frame, you'll be able to find out that there is another block in this place. And that's why we are talking about type of other block here. So the reason, so we said the entire area from here is your what? Your buy to sell. Yes. So why do price not always reaching our sponsor candle? So get this for once. The reason is because demand and supply is not sitting on your sponsor candle. Rather, it is sitting on your what? Buy to sell and sell to buy. So when I mean buy to sell, I'm talking about this area. Yeah. When I mean buy to sell, let me. Okay, buy to sell. So we can say this. We have this. This entire area here, there are candles on the lower time frame that makes up this area. This is our buy to sell. Our buy to sell entire candle. So from this entire area, from here to here, is what we call our buy to sell. So remember, the reason is why price don't always get to our sponsor candle before selling is because our demand and supply is not sitting on our sponsor candle, on that other block that we think is the last candle. Rather, it is sitting on our buy to sell. Remember, from here to here, and this is how supply and demand works in the market. So remember, we don't have access to time frame and there are some time frames that we don't have access to. We are only accessing time frames such as the one that the trading view platform or MetaTrader presents to us. Okay, you don't have access to like 17 minutes, 24 seconds. Get, yeah. So we pay attention to the buy to sell and sell to buy, and also the sponsor candle. We pay attention to the buy to sell, sell to buy. Sell to buy is opposite of this, and our sponsor candle. Yes, are we getting that?
Yes.
Yes.
Okay. So we say the entire buy to sell makes up your entire supply level. So this is all supply. You can see when we started with our contents, we have order block, buy to sell, sell to buy, and we have demand and supply also. So you need to, this thing I'm showing you now, I'm showing you this, the thing are behind supply and level, supply and demand. So the entire buy to sell makes up what? Your entire supply level. This is our entire supply level from year to year. Okay. Which means that this entire level is your what? What we call marketplace. This entire level is called marketplace. So it's just like going to a store in a market, a physical market. So if you get to the market, do you have one store in the market? It's a question. Do you have one store in the market?
No.
Okay. So you begin to check from one store to another, Abi, to buy whatever you want to buy, right?
Yes, sir.
Yeah. So when you get into the market and meet the store, if you get to the market and you meet the store that you want to buy something and you're able to find what you want to buy in that store, you buy what you want to buy, and you get out from the market, right?
Indeed.
And if you also check the store and you didn't see what you want to buy, what are you going to do? You check the next store, right? Go to another store.
Yeah.
You go to another store. You continue going for another store. You continue going to another store until you reach the last store. And if you get to the last store, what happened? And you didn't see what you want to buy, you get out from the market, isn't it?
Yes.
So in this scenario now, your supply and demand is your what? It's your marketplace. It means, if price come here to this area and you see what you want to buy, you buy. If you come here and you don't see what you want to buy, you come to the next place. You come here. If you find what you want to buy here, you buy or you sell. If you can't get it, you come here. And if you can't get it, this is the last area, which we call our sponsor candle. It means if you can't get it here, you can't get it here. There's high chances that you will get it in this place. And if you don't get it in this place, get out from the market. So it means it can happen anywhere around here. Anywhere around here, this is where your supply is. Your supply can happen. Your supply is not just here. Supply is not just here. It's not just on this place. Your supply can happen around anywhere in this candle. A turning point can happen anywhere around this candle, around this area, this market area. So, and how do you know? If the trade will happen in this area? How do you know if there will be a turning point here? If there will be a turning point, how do you know the place the turning point? Is it going to happen here? Is it going to happen here or here? How do you know that? To know that is the power of MSU combined with IPA and what? EPA. Is it beginning to make sense now? So people will chat you up. They will chat you up. They can say, okay, let's say we have something like this now. But sometimes market doesn't come to your supply level. For instance, this is your supply level. And market still don't come to that supply level. Market can come to this area and what? And reverse. You get that? So if you are telling me market came here now, I'm able to sell. I sell around here. I sold around here. And I said, okay, you're asking me why do I sell around here? I said because it's good to sell. And okay, next time you too, you say when price come here, without reaching your supply level, you will decide to sell, and the market went more inside your supply level. And you say, but this thing is not working. So one thing you should know is, before you talk about supply and demand, one thing that comes first is what we call liquidity. So order block is responsible for most market level turning points, about 70 to 90% of the time, only after liquidity has been grabbed, which means liquidity comes first. Liquidity is actually the primary reason why every market turns where it turns from. However, order block is the next reason for it. But you are more than likely not to see the liquidity, but you'll be seeing the order block. So why am I saying price can turn without mitigating an order block? Because once it has taken liquidity, the market can reverse from that level. However, order block is one of the main reasons why market turns from its turning points. Hello guys, are you there? Hope you can understand what I'm...
Yes, sir.
Okay. We are supposed to have 2 sessions tonight, but we will be extending this session to tomorrow. We're going to be extending this session to tomorrow. 2 sessions tonight, then one other session. We are going to extend it tomorrow. Let's just extend it to tomorrow, because there are a lot of things I want to drop, but I don't want us to be working late at night. Okay, so this is the time you guys can ask questions, please, regarding this session, before I showed you what I'm seeing in the chat. You can ask your question. We'll be shifting the second session for tomorrow. I don't want us to spend much time into this. Okay. Are we good? Are we good with the class? Any question?
I'm good for now.
Okay, that's interesting.
Thank you.
All right. My processor is overloaded. There are so many things running on my system. So unfortunately, it's affecting my trading view. So I would try to resolve that. So just bear with me. So those things are things that I've been working on, but I don't want to quit them. So you can say in every turning point here now, it is order block is responsible for every turning point in the market. Let's say there's another block. Okay, for instance, now let's look at every turning point in the market. Here now, you can see there's another block here. There's another block responsible for this turning point. There's another block responsible for this turning point. There's another block responsible for this. This too, there's another block responsible for this. This too, there's another block responsible for this. I'm trying to look for where all this place there is another block. Everywhere there's a turning point, there's another block. There is another block responsible for it. Other block responsible for it. So as I said before, one way or the other, even if there's a particular place that a market turned from, that there is no other block, that you can't see another block, when you go to an higher time frame on it, there's high chances that you are going to find another block in that area. Yeah. That's why I say sometimes we are not even presented with higher time frame. Some time frames such as maybe 17 minutes, such as um, 17 seconds time frame. Those time frame, there are other block on those time frame that you might not be able to capture yet. But every market turning point, another block is responsible for it. So we are going to understand that other block is gets responsible for every turning point in the market, but liquidity is the major mover. Yes, is the major mover of it. So the concept we'll be diving in, and that is going to be second session, is going to tell us why markets moved from those particular area and why they turn from what? Why they turn from that supply area. Yes. So since we now understand that other block is what? Is objective. Yes. Other block is objective. And we understand that supply area is the marketplace. The entire supply marketplace. That's the buy to sell and the sell to buy. Yes. This entire area. This is our buy to sell. This is our buy to sell. This entire area. All this is our buy to sell. All this is our buy to sell. All these are buy to sell. So turning points, we don't have to wait for market to come to the last sponsor candle. Anywhere around here is our marketplace. And when market get there, market can turn. Market can likely turn anywhere. It can be this first side, it can be the middle, it can be the up. Market can turn anywhere from there. Get. So which tell us that other block is not just a sponsor candle. Get. We have type of other block. I get different type of other block. But what we are more concerning is sign with is the buy to sell and sell to buy, and that is the type of other block we are more concerned about. Also, our sponsor candle too is important because it's the extreme part of the other block. Yes. So the concept we'll be talking about is why market is turning. How you know when the market will turn from that area. How do you know when the market will turn from that particular area, and how to be able to understand what is actually behind there. So if you have any question, you can let me know. Otherwise, we can end the session till tomorrow, 9 p.m. tomorrow. Okay. Is there any question?
I don't have question for now.
Okay. All
No
right.
question from me.
All right. No.
I think it's clear.
Okay, that's good. Thank you, guys. Yeah. So we'll meet tomorrow by 9 p.m.
Okay.